Welcome one and all to our regular second Saturday webinar. Today I'm taking presentation from my office cabin. For the last few months, I took it from my home. Today I'm taking from my office cabin. This is a very good slides I have added in this presentation. We are interesting times. Market is going to see some interesting changes in coming months. Lot of things happening domestically as well as globally. So we are going to have a interesting market ahead in coming months. It's heavily raining in Trivandrum and in Tamil Nadu. I hope rainfall has come down. Coming into the presentation, market has been in consolidation in the last month. If you see Nifty, Sensex, mid cap and small cap almost range bound in the last 1 month. A small change has happened, but what we are seeing is that lot of individual stock churning as well as sector churning is happening. One of the reason why market is consolidating is that foreign investors has been heavy sellers in the last 1 month. They will be selling on a daily basis around 1,000 to 2,000 crores for 4 or 5 days. One day they turn into buyer, again they will turn into seller. That is what happening in the last 1 month. Yesterday they were buying, so market went up. But previously, if you see in the last few days before yesterday, they were continuously selling. So whenever foreign investors sell, domestic investors used to give some support to the market. But what used to happen is that market used to go sideways when foreign investors were sellers. Another interesting thing happening globally is that commodities, which have seen relentless price moving up in the last 1.5 years, is showing some signs of correction or consolidation. Many commodities has gone through the roof in the last 1.5 years, especially in the last few months. If you see energy commodities, coal, natural gas and crude oil went up very sharply, but they are showing some sign of correction or at least has peaked out in near term. So that is one positive which is for our country. But in commodity stocks, we have to be careful because the results which we are seeing is that the past results we are seeing. Even yesterday, if you see, Tata Steel came out with huge profits, but stock price fell down. The reason is that the Tata Steel results is on for second quarter, July, August, September period, where commodity price was very strong. Now, once if commodity price start correcting, means stock price generally used to discount the future earnings, not based on past earnings. Yesterday, I got a lot of calls from our clients that in spite of Tata Steel showing multiple times increase in profit, why the stock has come down. See, as far as commodity is concerned, market used to discount in advance what is going to happen in the next 6 months or 1 year. So the results based, if you see the results and buy, it won't be a good strategy for commodity stocks because whatever results we are seeing, it is a backward data. So we have to predict the future commodity price and then react to the buying or selling a commodity stock. So commodities are showing some sign of correction or at least peaked out in near term. I feel that is positive for majority of companies because many companies margin has crashed very sharply in the last quarter results, especially commodity consuming companies. Whereas commodity manufacturing companies, they showed huge profits. ONGC has come out with very heavy, huge profits. Similarly, Tata Steel, SAIL, yesterday night, Nalco came, their profits went up multiple times. So all these commodity-based companies showed huge profits, mainly because commodity prices went up, whereas commodity consuming stocks, their profits has come down. Another interesting thing happening is that US markets are at historic levels. They are not showing any signs of correction. Even yesterday, both NASDAQ and Dow Jones went up very sharply. So globally, the mother of all markets, US market is still bullish only. As far as domestic economy is concerned, I expect next few months it will be very good for domestic economy, mainly because we had a lot of tailwinds. Tailwinds are there. Government is going to spend a lot of money because of the election is going to come. Already they have reduced fuel prices sharply in the last week. And then as some more tailwinds are there that I will explain in the next slide. And overall, if you see, that market has consolidated in the last 1 month, and Nifty Sensex both up by 1%, mid cap by 1.5%, small cap marginally down by 0.3%. As far as domestic economy is concerned, I feel very positive. We are going to get a lot of good news as far as the domestic economy is concerned in the next few months, because the IT sector, which is our economic growth engine, is doing very well, and there is large scale recruitment happening across IT sector, from large cap to micro cap companies. I attended a lot of conference calls. Every individual company is telling that they are recruiting heavily. Even yesterday, a micro cap company called Nucleus, I gone through their press release. Even in that, they have told that they are going to recruit 500 employees for them. It's a small company having less than 2,000 employees working in their company. For them to 500 employees is a big, almost 25% of the total employee role they are going to increase. As well as the other thing is that a company has given a large scale pay hike to almost all IT employees in order to either retain them and not to go to other companies. So IT sector is one of the biggest tailwind for our economy, and it is going to do well. The lot of recruitment happening. Actually, it may be slightly negative for IT companies as far as margin is concerned, because if you recruit more people, means they have to keep some people on the bench, as well as some people for training, where it will reduce. It will be an expense for the company, because immediately they are not going to give output for the company. But for long term, it will be benefit for them. But near term, it will be a big margin compression for IT sector because of large scale recruitment and salary hike. But for a country, it is going to be a big positive, because IT employees generally used to spend money whatever salary they get, and the salary level also a decent level, and the IT sector will give a big boost to our consumption in next 1 year at least. The second important thing is that government was spending less in the last 6 months. From April to September, if you see, government was not spending much. The fiscal deficit was kept under control, even though tax collection was very high. But from here on, what I expect is that government is likely to spend heavily. One of the reasons why government wants to spend in the second half was that next year 4 state elections are coming. So just before the election, if they start spending, means it will give big boost to the economy, and people may get a feel good factor just before election, and then that may translate into vote bank for the ruling government. That may be the strategy why they did not spend much during the first half, whereas they may spend more in the second half. And last week also they have reduced fuel price in petrol and diesel, and by the central government, and many state government have reduced the VAT. So the almost government is going to lose for around 45,000 crores. The central government alone going to lose around 45,000 crore because of the fuel price cut, and that will be a small stimulus to our economy. And additional government spending will be a big stimulus to our economy. The third important thing which is happening positive for our economy is that after many years, exports are doing well, and we have discussed this many times in the past that exports is continuously doing well. And for any country to do well, export has to do well. For any economy to do well, export has to do well. China, if you take in the past examples of countries which has done very well in their economy, their exports has done well. Some of the few examples were Japan, China, Vietnam. All these countries, the economy did well because of exports doing well. Now we are seeing exports has been doing well, but still we have a long path ahead for exports to do considerably well in coming years. We in the last 6 months it has done well, and we expect that exports will do further well in the coming months. And the other positive is that commodities has peaked out in near term, So crude oil, we feel that it has peaked out, and there is a possibility of some consolidation or correction from here on. Similarly, the other commodities like steel prices and other chemical prices, almost most of it has peaked out. The main reason why commodity prices went up is because of the supply disruption we have many companies faced it due to COVID condition. Now that is normalizing, and because of that, some moderation in commodity price is expected in coming months, which is a positive because many companies were complaining that commodity prices has spiked out, which they haven't seen it in their lifetime. In that way, many commodity prices gone up, and some cooling or consolidation will be good for the overall economy for consumers as well as for producers also. Because if prices goes up consistently, means what used to happen is that ultimately it will reduce demand and demand restriction will come. So some sort of consolidation or some correction in commodities is good for both consumers as well as producers. So based on all these things, I expect that our economy will do well in coming months, and it will be very positive for banks and domestic consumption stories. And this is the IT exports data. It's a very important data. It's a very interesting as well as important data. And you know that our IT exports contribute to majority of our service sector. And if you see in FY 2021, India exported almost 150 billion worth of IT services. This is almost equal to the crude oil we import. See, this IT service comes under service sector. What we see every month, the data released by the government, export and import data, that is for trade merchandise, and IT won't come into that. And IT is classified under service exports, and it will be separately issued by the government, the amount of service exports we are doing in IT sector. And if you see that in early 2010s, that is 2006, 7 and all, IT sector used to grow around 33%, 35% like that we used to grow. Because the base was very small, we used to export just 24 billion, 30 billion in that range. So the base was small, we used to grow on 30% like that, a big growth in that. Now what has happened is that from 2016 onwards, the IT sector exports overall has gone above 100 billion, which is a big base. So naturally the growth has come down from 35%. It has come to less than 10% in the last 5-6 years. And if you see in the last 5-6 years, it was less than 10%. In 2020, it was 7%. 2019, it is 8%, and 2018, it was 7%. And 2021 financially, it is 2%. Mainly because of some COVID disruption. What we are expecting from 22 onwards is that IT sector is to grow around 10 to 15%. Lower teens we are expecting to grow IT sector for at least for next 2 years, because beyond 2 years it is anybody's guess how it will grow. But based on the order books and companies making recruitment, we are expecting that IT sector will overall grow by at least 10 to 15% for the next 2 years. So the base is already very high. So 10% from 150 billion means it is 15 billion excess exports from India. And the employment they are giving because of this export is a vast lakhs and lakhs of people. What we are expecting is that around 5 lakh new employment, is getting generated by the IT sector. Last 2 years, if you see, the employment was around between 1 to 2 lakh only, because the growth rate was less, around 7 to 8. But from current year and next year, it is expected around 5 lakh new employment will be generated from the IT sector alone. So it will have a multiplier effect, because a person who got an employment in an IT sector, what he will immediately do is that either he will buy a two-wheeler or he will buy a car. Then after 2 or 3 years, he will get married. Then he will plan to buy a house. He will take a loan and balance whatever savings he has. He will put that money in the in buying the house. So while buying a house, what will happen is that all the paint companies, building material companies, cement companies, they will get demand from the this IT people. So overall, it's going to be have a multiple effect because of IT sector going to do well for the next 2 years. Till US markets does well, IT sector will do well. Suppose if we see 2000 type of crash in the US market for in the next 1 to 2 year means, then after that many orders may get postponed, then we may get an issue. At least for the next 2 years, we are expecting IT sector will do well, and it will create lot of employment opportunity, and in turn it will boost our domestic economy as well as. This is the Indian exports import data, and this is for the merchandise export. What I have seen shown previously is the IT sector export. That won't come into this because IT sector alone is India is doing around 12 to 13 billion worth of IT exports India is doing, and this is the merchandise export per month. If you see that around 35 billion worth of merchandise export India is doing, and if you see the data, it is consistently above 30 billion for the last 8 months. Since March onwards, the overall merchandise export is above 30 billion, and it is consistently going up. And October it is 35, and in September it is 33.7, and in August it is 33. In July it was little higher because we had a lockdown and then it was open. So July the exports was little higher, then it fell down little bit, again going up. And in this space, if we go means I am expecting so it will cross 40 billion per month of overall merchandise export in coming months. Among the sector, chemical is doing well, IT say textiles are doing well, engineering side is doing well, gems and jewelry is doing well. So it is across the board. Agri is doing very well. So across the board, we are seeing good demand in exports in our country, and it is very positive for our economy. Imports, if you see, imports also very high. So whenever exports doing well means naturally imports also will do well. And if you see in the last 2 months, imports also has gone up very sharply. This imports includes two other things apart from merchandise. One is the crude oil, because recently crude oil prices went up very sharply. The amount of crude oil we are importing for the same barrel of crude, the value will go up. So since crude oil prices has gone up, naturally the value also has gone up. The other thing is that gold import also has gone up very sharply in the last 2 months, and that also has contributed very high import value. So overall, exports and imports are doing well, and some of the things and all what we used to do is that we will import it, and then we will add value addition, and then we will re-export it. So for that also, the import value will initially go up, which is followed by export value. And one thing where people are comparing export and import is that they are not comparing with the last year data. They are generally comparing with the 2019 data, because in 2020 everybody knows that there was COVID across the world, and many business got disrupted. So when you compare with 2019 data, if you see means exports, if you see it is 26 billion in 2019. And in October 2021, if you see, it is 35 billion. Almost 35% growth is there when you compare with 2019 data. And in 2021 data, it is 42. So it is always better to compare most of the data with 2019. Then only it will give you a real correct picture. Otherwise, most of the data when you compare with the last year means it will give you a distorted picture. Even for results and all, if you see means, it is better to compare with 2019 results instead of comparing with 2020, because in 2020 some industry got disrupted, many industry got disrupted at various points of time, and comparing with 2020 results or previous quarter results won't give you a correct picture. Better compare with the 2019 data, that will give you a correct picture. And if you see that when you compare with October 2021 exports with October 2019 exports, almost 35% the export has gone up, and imports it is 45%. and 35 and 45 is a big jump. I know that only in 2003 to 7 only we had a very good export and import data. Exports were consistently growing around 15% month on year on year comparison for many months and many years. So if we keep on growing, our exports keep on growing like this means then our naturally our domestic economy also will do well. Since exports has gone up, if you see that the trade deficit has increased considerably, and October 35 billion exports, whereas imports is 55 billion. That is almost 20 billion worth of trade deficit was there. This partly compensated by very high IT sector exports, but still our trade deficit remains high now. GST collection, the other way to look how our economy is doing well is by seeing the GST collection, and it has been consistently going up. And if you see that, it is the GST collected is the second highest after the collection seen in April. April, we can't compare the data with April because April is a seasonally highest tax collection month for the government. If you take any year, if you take April will have the highest tax collection because the tax collected is for the sales of the month, for the March month. So what used to happen is that March year end month used to have a lot of transactions in the economy, and that will get reflected in the April collection. That is why in April we had 1,41,000 crores of GST collection. Then after that it fell. Then again it started going up. Now it is 1,30,000. And naturally the GST collection will keep on going up from here on. One negative one for the GST revenue collection is that the auto sales has been little weak due to chip issues, and because that may distort GST revenue collection in near term. But overall, from other sectors, the GST collection has been very healthy. Globally, many important things are happening, and one thing which I will keep eye on it is the Chinese economy. Already we are seeing that we are hearing a lot of news from China that many real estate companies are struggling in China because Chinese government took a lot of steps to slow down the real estate sector, and real estate sector is very important for Chinese economy because the companies, real estate companies and companies which are dependent on real estate, almost 30% of China GDP belongs from real estate and real estate related sector. So if that 30% of GDP slows down means naturally the entire economy will slow down. Already we have seen that a company like Evergrande, they faced some liquidity issues because of cash flow problems, just like ILFS in India, and Evergrande issued liquidity issues, and that was highlighted in all media. Like Evergrande, many big other Chinese real estate companies also are in deep financial crisis, and rating agencies are cutting their Chinese real estate company rating consistently. Many companies rating has been cut in the last 1 month, and what indicates is that there is a real trouble in the Chinese real estate market. And why that trouble has come? Actually, Chinese government has induced the Chinese real estate slowdown. Because the reason why Chinese government did was that real estate prices went up very sharply in China. Many real estate companies which took lease from the Chinese government land at a very high price, they took debt from the bank, and they were buying real estate at a very high price from their local authorities. In China, actually, all the land belongs to the government only. An individual cannot own the land. What they can do is that they can take a lease. They can take lease from the government by paying some money, and then they will build the apartment, and then they will sell it. The lease period will be for 20 years, 30, 50 years, like that. So the land will still belong to the government only. Only that they will take for lease. So an individual cannot buy land. Like in India, an individual cannot buy land in China. They can take lease from the authorities, either it would be municipal authorities or state authorities or other, and then they will build the apartment, and then they will sell the apartment. What the Chinese real estate companies were doing is that they were taking a lot of loans from the Chinese banks, and then they will taking lease at very high prices, and which were ultimately pushed the price of all the apartments, and that very high price has made the middle class of China unaffordable. And Chinese government did not want that. They want most of the people to have affordable houses. So what they have decided is that they decided to reduce financing to the Chinese real estate companies, and they put a lot of restrictions for banks to lend money to real estate companies. So once the supply has been cut, the money supply has been cut. Naturally, what happened was that the China real estate companies could not be able to buy extra land and lease extra land from the authorities, which means that naturally price will start coming down once demand comes down means. So it is a Chinese government induced real estate slowdown, and it may continue for some more time. Why I am telling is that the real estate sector and related sector contributes almost 30% of China GDP. So one big component slows down means what happen is that entire Chinese economy will slow down, and then naturally it will have impact on metal companies, particularly steel companies and other base metal companies. It will definitely will have impact, because once real estate sector slows down means what will happen is that naturally consumption will come down. The steel consumption and the metal consumption, everything will come down, and demand will come down means what will happen is that price will start falling. And if you see that the Chinese government wants lower inflation in all, in real estate and other things, they want lower inflation, and this is clearly indicated from their government action. As I told, they took a lot of action in real estate sector. Similarly, recently many base metal prices went up to the roof, mainly because of supply disruption. What government did was that they have some strategic reserves of these metals. What they did was that they started selling from the strategic reserves in order to reduce prices. The other important thing they did in the last 1 month is that the many prices went up because of speculative buying also in a commodity exchanges and all. What government did was that they increased the margin very sharply, so that the speculative level will come down. Those who are taking speculative position, they could not be able to take position because the margins are very high, and they increased a huge margin for products like thermal coke, coking coal, and iron ore and all. That led to sharp fall in the price, because the speculators started unwinding their position, which led to sharp fall in coal prices in China, both thermal coke and coking coal. And government intention is very clear. They want lower commodity prices. As a spectator from India, a country which consumes 50% of global, which has 50% of market share in many items like steel and base metals, and if that government wants lower prices means, my feeling is that naturally prices may come down, base metal prices and other steel prices will come down. Even if it doesn't come down, unlikely to go up sharply from here on, because the government intention is very clear. They want lower prices, and they are taking a lot of action to reduce prices also. So what I feel is that commodity prices, either it will stabilize at current rate, or it will start moving sideways from here on. And the highest prices we have seen in the past, in the recent past. And this is the coal price. If you see that coal price went up very sharply, it is a 10-year chart of coal price. And if you see that coal price used to be trading range bound for almost 10 years, 9-10 years, but suddenly in the last 6-7 months, if you see, price went up by almost 2.5 times. From $100 per ton of coal, it went to 275. But Chinese government, what they did was that they started taking a lot of action because the power cut came in China. One of the reason why power crisis came in China was that many private power producers, they stopped buying coal because coal prices was very high. They stopped buying coal and stopped generating power, and that lower power production by the private company led to huge power crisis in China. The power producers, the coal price is market determined, whereas the power prices is government fixed. So when raw material prices goes up very sharply, they could not able to pass on the higher power price to consumers. So why should one runs a power plant for making losses? So they close down the power plant because the raw material, which is the coal, they have to buy at a high price, whereas the power price, which hasn't gone up, they have to sell it at a lower price. So raw material prices are high, whereas the power prices are low, which means company will make loss. So instead of making losses, they stopped producing power, which led to huge power crisis. In order to avoid that, Chinese government, what they did was that they increased the hiked the margin of coal prices by a huge margin, as well as they asked their coal mines to produce lot of coals. And now the production has increased sharply, as well as the lot of speculative portion has come down, which led to a very sharp fall in the coal price in China. And globally also, the prices have started falling. And if you see that it went up to 275, from 275, it has come to 150 level. Even yesterday, I saw that around the Chinese late trade, Chinese thermal coal and coking coal prices has come down by 7%. So the intention of the government is very clear. They don't want higher prices for basic energy prices like coal as well as the metals also. And I expect that the commodity stocks, we have to be very careful in the coming months. What others were telling is that those who are bullish on the commodity stocks, what they are telling is that China has slowed down, whereas the other countries like US and Europe, they are going to spend heavily for the infrastructure, and that will keep the demand higher. That is the counter argument made by the metal bulls. But still, I believe that a country which has 50% of market share, if they don't want higher price, means naturally either price will stabilize at current level, or either they may go sideways. And this is the cargo prices, and it is took from the Baltic Freight Index, dry Baltic Freight Index. And if we have attended any company conference call or any press release, if you see, almost all companies would have told that their shipping freight cost has gone up very sharply, which led to margin compression, as well as container cost has gone up very sharply, which led to margin compression. That is the commentary we have heard from majority of export oriented companies. And if you see that, this is also a long-term chart, almost a 25-year chart. And if you see the price of Baltic Freight Index, which calculates the shipping cost, and if you see that in 2007, it went up very sharply. Then the financial crisis came, it fell very sharply immediately, and then it was range bound. Now, if you see in the last 1 year, the shipping freight cost has went up, skyrocketed, and in the last 1 month, now it has started coming down. So it's good news because it indicates that shipping price is coming down, which is positive for exports and imports, because shipping, many companies has indicated that a very high shipping cost generated their margin. Now that is showing some stability is coming. The price went up very sharply. The same way it has started coming down, which I see is as a positive for exporters as well as importers. So commodity prices, some correction is coming. The other high charge, which is the shipping price as well as the container prices, that also started cooling down. And because of high commodity and shipping cost, the margin pressure has hurt the profitability of many companies. If you take a bellwether company like Asian Paint, the revenue has gone up more than 30%. Whereas if you see, the profitability has come down. For a company like Asian Paint, which has a huge pricing power, even that company could not be able to withstand the high commodity prices, and that got reflected in the results. So for any company, any sharp increase price, raw material going up by 50%, 100% within 2 months, 3 months will be very difficult to pass on in a near term. They will definitely pass on, but it will take time. 3 months to 6 months it will take. Stronger companies, they will able to pass on quickly, whereas weak companies, they will take at least 6 months to pass on. But till then, what will happen is that the margin contraction will happen in their profitability. That is what we have seen in the result of companies like Asian Paints and many chemical companies and pharmaceutical companies. Yesterday, I saw two companies' result. One is the IOLCP company, where the raw material price has gone up very sharply and the profitability has come down by many times. Almost 70-80% of our profit got eroded in the quarterly results. Similarly, company like granites also we have seen. So many companies which are in a chemical sector, they got affected. This result is not yet over. The real effect of high commodity prices, especially in chemicals, we are going to see that impact only in the third quarter result. Because till second quarter, what they happened was that they had some old inventory, which is they used it, and the price went up very sharply from September onwards only. September and October price went up very sharply. There has been a huge shortage of many raw material because of Chinese power crisis, and that result will get reflected only in the third quarter. So the third quarter results also is going to be very bad for many commodity related chemical companies. That result will come only in the month of January or February. So next the 3-4 months, what we are going to see is that many companies may see sideways movement, especially in API companies, especially in pharmaceutical API companies, and some chemical companies like IOLCP. They are going to see a tough time for the next 6 months. And this is the Q2 result performance. And if you see that I have compiled 1,417 companies. This data I took it from Business Standard newspaper. And if you see that the sales has gone up by 29%, whereas profitability has gone up by 26%. So there is a healthy move in the sales and profitability. But most of the profitability here has been contributed by the commodity companies and the bank, because many PSU banks which were showing results, they have started posting profits, and commodity companies like Tata Steel, SAIL and all, if you see that the profitability has gone up multiple times. So major contribution from the profitability is mainly from the commodity companies as well as from the major from the financial sector. Sales, it has been good across the board. When you compare to last year sales has been down because of COVID disruption was there, whereas profitability went up. If you see last year quarterly profit went up by 59%. One of the reason was that work from home culture brought, and the traveling expenses companies cut at that time, as well as the raw material prices fell very sharply during that period, which boosted profitability for many companies. That is why, in spite of COVID disruption, the profit went up very sharply in the second quarter of last year. This year also the second quarter result is good for majority of companies, but some companies witnessed margin pressure. And still, if you see in a granular fashion, if you see in the granular fashion, I have put that data that companies excluding BFSI, that is BFSI means banking and financial services company. If you exclude that company, this data I have took from a Business Standard, Business Line. Last Sunday, they have put one beautiful article on the front page, and that is they have compared the results of 923 companies they have compared. And if you see that sales has gone up by 36. This is excluding BFSI, banking, financials, services and insurance. That has been excluded in these results. And if you see that sales has gone up by 36%, margin has gone up by 16% only. Margin if your sales 36% it has gone up, whereas margin 16% it has gone up, whereas profitability, if you see, it has gone up by 24%. So profit hasn't gone in line with the sales. Suppose if you exclude both BFSI and commodities also, if you exclude means the revenue has gone up by 23%, whereas the margin, if you see, it has gone up by just 5%, and profitability, it has gone up by just 2.4. So what does it indicate is that majority of the profit has been contributed by the BFSI as well as commodities. Commodities, if you include commodities, the profit has gone up by 24%. Whereas if you exclude commodities, it has gone up by just 2%. And if you take a company like Asian Paint and all, actually their profitability has come down. The sales has gone up, whereas profitability has come down. It is negative for net profit for them. Since we are combining with commodities as well as BFSI, in a previous table, we have seen that profit has gone up by 26%. Whereas if we exclude both commodities as well as BFSI, almost profit has been flat for many companies on a consolidated basis. Some companies' profitability has gone up, some companies' profitability has come down. Companies like Asian Paint profitability has come down, but when you combine together, the profit has been flat. After this China slowdown, the other important event which has happened globally is the US Fed has announced a taper, and it is also very important because right now for the last 2 years, in spite of COVID disruption and other major issues, the stock market has been continuously going up. One of the reasons for that is the huge supply of liquidity from US Fed, and they were buying 120 billion of treasuries every month. 120 billion of treasuries and mortgage-backed securities, combined treasury and mortgage-backed securities, they were buying 120 billion from the market, and that means 120 billion dollar has been injected into the economy every month. Now the inflation have started going up, and because of that, US Fed has decided to reduce this bond buying so that the liquidity available globally may come down. Actually, it is still not liquidity going going into negative. Actually, what is happening is that the amount of liquidity pumped into the economy, the excess liquidity, that will start coming down from next month onwards. What their plan is that every month they will reduce bond buying by 15 billion. For example, in this month they bought 120 billion worth of treasuries and mortgage-backed securities. Next month, what they will do is that they will buy 105 billion worth of treasuries and mortgage-backed securities. Then after again next month, what they will do is that they will buy for 90, then 75 billion. So gradually every month 15 billion will come down, and naturally by July 2022 the whole bond buying program will get concluded by July 2022. This is very important because it is the excess liquidity that has been getting injected into the economy every month. So that tap will get closed by July 2022. And after that, if the inflation remains very high, means most probably US Fed will start hiking rates. So till July 2022, US Fed is unlikely to hike rate. But after that, right now the consensus expectation is that one rate hike is expected from US Fed from in second half of 2022. That is what expected. And US Fed still believes that inflation is transitory due to supply issues, and it will get normal by late 2022, second half of 2022. And it has to be closely watched because many companies, in spite of loss making and in spite of having poor financials, they are getting huge valuations. Who is subscribing is that many foreign investors were subscribing, as well as the retail investors has been subscribing to that. The reason is that there has been huge liquidity available in the world market, and that is get channeled into this type of stock. So once this bond buying program is concluded, means then what will happen is that naturally liquidity will start coming down. So that has to be seen how these stocks will do in 2022. And this is the US inflation. And if you see the US inflation, this is the data which we got last week. It is 6.2% inflation we have got it. It is one of the highest in recent times. Even in India, we have less than 5% inflation, consumer price inflation. Yesterday, it was around 4.5% inflation, whereas in US, it is still higher, 6.2% inflation. So if inflation remains stubborn, means then naturally we may see rate hike coming next year. Now the US taper is happening, and then the inflation will start. Then US Fed will start hiking rates if inflation remains stubborn. And bond yield, if you see that, still not yet reacted to the inflation data. One of the reason is that US Fed told that they may hike rate only after the end of tapering program, and that is why the bond US bond yield not yet reacted, US bond market not yet reacted, and we have to see how it comes in coming months. And IPO market, it will remain active because many new companies have filed, got approval from SEBI to come for IPO, and it will remain active in the next 2-3 months. And many new age tech companies are getting listed. Recently, Nykaa got listed, and previously we have seen that Zomato got listed, Cartrade got listed, and these are all new age tech companies. And right now they are getting good valuations. Only time will tell how these companies will get value. Only when things get normalized after 2 or 3 years, only we will come to know which company will success, or which company will go down. Definitely, 1 or 2 will become a huge success after 5 or 10 years. That at current point, it will be very, very difficult to tell. As in previous bull market, most of the IPOs are pricey, and what analyst comments are that it has been a very mixed comment. Yeah, everyone knows that the issues are overvalued, but still no one is giving avoid a recommendation, because once it gets listed, it is listing at 75% premium, 100% premium, like that. It is getting listed. So if you tell avoid means, then what will happen is that many people will start asking, you have given avoid recommendation, but price got the stock got listed at 100% premium, like that analyst will get a bad name. So what many analysts are giving is that they are giving short-term positive and long-term negative. That is the recommendations what most analysts were giving for the new IPOs, because they definitely know that the IPO is highly priced, but still they don't want to give avoid, because it will get listed at a premium. So if you are risk taker, means you apply it, because a short term it will get listed at a premium, but after 2 or 3 years we don't know what will happen. It will all depends at the time how market condition will be. That is the recommendation most analysts are giving. 3 years back, what they used to give is that short term it may be the stock may not be doing well. Long term we are positive on that stock. That is the comment used to given by the analyst previously 3 years back. Now it is entirely opposite now. Short term positive, long term negative. That is the comments given by the analyst on many IPOs we are getting now. The other important thing which is happening globally parallelly with the stock market is the cryptocurrency market. If you take the cryptocurrency market cap now, it is almost 3 trillion against the equities for 10 trillion. That is 30% of equity market, near to 30% size of equity. Now the crypto has come up, and the beauty about the crypto market, cryptocurrency, is that almost 7,000, 8,000 cryptocurrencies are available globally. We don't know which one to rely and which one not to rely, and many retail investors are buying without understanding how crypto works. Even I also don't know how crypto works, and I studied one time. I could not able to understand completely. I have to go through it 3 or 4 times. Then only I could able to understand how crypto works. and it is based on blockchain technology. That alone I know. Apart from that, how it is valued and why people are buying and who is selling, that detail and all I don't know. But many retail investors have started buying the crypto. Uh, Daily, I'm getting 2 or 3 calls from the retail investors mentioning that they are interested to buy crypto and whether it is possible to buy it through your broker, through your demat account. And I'm getting inquiry. But that type of retail frenzy is there in crypto market. One of the reason why many people got involved in this is that the crypto people, they are making huge advertisement in the media. If you are seeing the cricket matches and all, more than 30-40% of advertisement is coming from the cryptocurrency people. And by seeing that, and many of them, many retail investors are getting into the crypto market. They have to know the risk without before investing, because it is still unregulated in many countries. In China, they have completely banned it. They have took a bold step by completely banning it. And in India, it is not regulated. 2 days back, also our RBI governor told that they are very much concerned about the cryptocurrency, and the people are involving in the cryptocurrency market, and some regulations they are planning to bringing in, and they have told their advice already to the government, and we have to see what government is going to bring in. And since it is unregulated, it can be cheated very easily. And 5 days back, I read in a newspaper that in Kerala, some 100 crores has been cheated from the individuals who are involved in the cryptocurrency. Even if you got cheated, you can't go and register a case in the police station also, because it is an unregulated market, and one has to know the risk correctly and then has to invest. So this cryptocurrency brings me one of the favorite quote in the stock market. One of my favorite quote is the quote told by the Sir Isaac Newton. Everyone would have known that name. He's a great scientist in 1970s, so where he found the law of gravity. The gravitational force has been found by Sir Isaac Newton. Apart from that, he has contributed a lot of things in the mathematics and physics, and he did a lot of research in that area 300 years back. So he mentioned one quote at that time. What is that? Is that I can calculate the motion of the heavenly bodies, but not the madness of people. This is one of the quote which was told 300 years back, and I feel it will remain immortal forever till the world is there. Why he told like that was that in 1970s there was a big bubble came, which is the South Sea bubble, like tulip mania. This is also one historical bubble called South Sea bubble. If you type bubbles globally, which has happened, means this South Sea bubble will come, and it happened in 1970s. The South Sea is one company which was established in 1720s, 300 years back. At that time, government did not had money to put a company, so they floated a public limited company called a South Sea Bubble to bring African laborers, to export African laborers to other countries. They put in. So there was a huge hype on that company that it will do very well. Initially, Newton put some money in that stock. It got doubled, and he sold it out. Then he sold it out with a very good profit, almost double the profit. He sold it out. Then what happened was that again the stock started going up very sharply, and everyone started buying it. And Newton feeling left. What he did was from the rate he sold, multiple times higher price. Again he bought it because the stock has been continuously going up. Everyone was buying in madness that stock, and it expected to do well. The stock he sold it initially with a very good profit. At a very high point of time, he again bought it because the South Sea stock has been going up. Exactly at the peak point, he bought it again. And after he bought, the bubble bursted, and it fell very sharply. That South Sea stock fell very sharply, and at that point of time, he lost almost 20,000 pounds of money. Almost his entire savings he lost. 20,000 pounds is a very big money in 300 years back, and he lost his entire savings at that time. So based on his personal experience, he told that the stars and many stars are there in the heavenly bodies where I could able to calculate the motion which are thousands and lakh of kilometers away from the earth. Their movement I could be able to calculate. But I could not be able to calculate the matters of people are so mad that whatever is going up without looking into anything, they are buying it. So based on his personal experience, he told this quote. And what I feel is that the way the crypto is going up, I am seeing the same thing. People are buying without understanding what is meant by crypto, what is the risk involved. Suppose if they don't give money, what will happen? Nothing they are thinking, but simply buying it because prices are going up, because one of their friend has made very good money, and because one of their neighbor has made very good money. That is the only reason because they are buying it. So it reminds the quote of Isaac Newton, and one has to be very careful. And equity mutual fund flow, if you see that flows has been gradually coming down, and in the last month the flow has been around 4,000. Previously it used to be around 3 months back it was about 20,000, mainly because of IPOs. Some mutual fund IPOs came. Now it has come to around 4,000 level. FIAs, they are continuously selling in the market, and if you see that almost from April to now November has come, almost 7 months has passed away, and 7.5 months has passed away, but still FIA flows has been negative to 1.3 billion, and they are very cautious in the market. At every higher price they are selling in the market. This COVID, it is not at all ending, and if you see that countries like Russia and Germany, the peak cases have surpassed their previous high. Though globally, if you see, it has come down and again started going up, mainly because Europe is again started seeing lot of new cases, and Russia is also still seeing. The war is not ending, in spite of people are vaccinated. So many people got vaccinated. It is still not ending, and we don't know what will be the end game. The only thing what we know is that we have to live with it. That is the only thing we can do as far as now. And India, luckily after the second wave, there is no third wave, but we can't be complacent because of that. We have to be very careful. Anytime third wave can come, because when countries like Russia, Germany and all, the cases have surpassed the second wave, and we have to see how it will come out. Till then we don't get it, we are lucky. That's the only thing we can tell. But how the end game will be, no one knows. We are getting a lot of reports that China also seeing a lot of new cases. So conclusion, market is going to be very volatile for the next 2-3 months. The budget also will start coming in. So there will be a lot of churning happening in individual stocks as well as sectors. And momentum, don't chase momentum unless you are very confident about the stock or for trading purpose. Always keep an exit strategy in place for individual stocks. If events change, things will change very quickly, and so always keep an exit strategy. A stock which has gone up by 10 times, 15 times can easily fall by 50%. Then again it can continue the rally. But if you cannot able to, if you don't have the stomach to see that much of fall, means better you have an exit strategy or keep some stop loss. That's the only thing I can tell. And events to watch, foreign flows we have to watch very closely, because it is very important. Because of their consistent selling, market is not going up, and any change in foreign flows to buy means then market may do well. Energy prices, crude oil prices went up sharply. Now they are showing some signs of correction. It has to be closely watched. Chinese economy, some slowdown is expected. that also has to be seen. Then the US taper, they have already announced it, how it will have impact on the global liquidity, that has to be seen. So these are the events to watch. Now we will see into the recommendations. So this is the recommendations I have given. This time I have given little safer stocks I have given, because market is going sideways. So better to be on the safe side in near term. And first stock I have given is the Bharti Airtel. After many 10 years of consolidation, the stock has given a breakout a few months back. They have completed the rights issue, and still the problem with the Vodafone is continuing. So Bharti Airtel, one can consider with a long-term view, they can buying. The next one, the stock the three stocks which I have given is related to the economy, because right now it is expected that the domestic economy is expected to do well, and the housing sector as well as the capex cycle is expected to pick up. So based on that, I have given the Polycap, which is the market leader in cables, which are used in domestic and a variety of other industrial uses. And that I have given previously also, we have recommended Polycap, and we still feel that in the next 2 years, 3 years, they will do well. Right now, the valuation little on the higher side, but still based on the available opportunities and the future growth, we are recommending this Polycap. And third one, if you see, means there's Manappuram Finance I have given. One thing is that the gold has been underperforming for the last many months. And Manappuram and Muthoot Finance, the gold, their business consistently, their business depends upon the gold price also. If gold price falls sharply, means what will happen is that NPA used to go up, and the corpus also, AUM also used to come down. Now we are seeing the first sign of gold price started going up, and some foreign brokers also, they have given positive opinion on these gold finance companies. Two gold finance companies are there. One is Manappuram, other one is Muthoot. Both have started showing some momentum. They have started showing. So on that basis, I have given it. The fourth and fifth company, the Grindwell Norton, is an abrasive company, which mainly depends upon the capex cycle and the industrial usage, and it's an MNC company. The promoter is an MNC, Saint Gobain, which is a multinational company. And valuation, if we see, means it is little on the higher side. So the two companies are there in the abrasive. One is the Carborundum Universal. The second one is the Grindwell Norton. Valuation is little on the higher side, but still based on the growth opportunities and the strong balance sheets the company have, we have recommended it. The fifth one is the Schaeffler India. Already we recommended in our conviction area about the MNC bearing companies. And one of them is the Schaeffler India. They supply to both in the industries as well as the auto sector. And this also we are recommending it. So these 5 stocks we are recommending this time. And October review, if you take, we have done phenomenally well. All our stocks did well in the last month recommendation. Almost 4 stocks has achieved target. L&T still looking bullish. It achieved our target price, and 13% it has gone up in the last 1 month. Tata Motors, because of EV play, one PE player is investing in the EV subsidiary. So that has done well. 15%. IEX has done very well. Tata Coffee has done very well. Only thing, the GNFC did not move as much as expected. The other stock done well. Overall, portfolio has gone up by 11%, whereas Nifty, even if you take mid and small cap, it was flat. So last month recommendation has done very well. So this is the recommendation. This is the review of what I have, what we have given last time.